Hello and welcome to another video. In this video, I will cover the deep dive into this company, the Spotify, or the ticker name is Spot. This is one of the requests made by one of my YouTube subscriber. His name is Boris. I hope I have pronounced his right. I apologize if I make any mistake. So I'll try to I analyze the stocks try to go over deep into the financials and then try to form the opinion. Especially now I see a recent spike within a few days in the stocks, and the stocks jumps a lot. So as you might heard in the news, and then does it really make sense to have this stocks for the long term? So I'll just present the fact and let's see how this all goes. So from the agenda perspective, I will cover the Spotify, the company overview, deep dive into the financials, risk, and try to explain why there is a hype or spike in terms of the spot ticker price right recently, and then try to form the opinion. Okay, as a disclaimer, I don't have any stock. I don't own any stock of the Spot. So and this is just because of one of the comments I just made, and I thought, okay, why not just go there and try to form my opinion on that one. This is just for the entertainment purpose, and thank you for giving me the opportunity to and asking the questions. So I got the opportunity to go and did my analysis on that. Okay, so the Spotify is, what is Spotify, right? Spotify, basically these are the music, you can listen to music or podcast, or these are basically the directories, right? That's how, if you can say, the podcastings. There are other podcasters which Apple introduced as well, right? The very first time in many years ago, and then people who has the iPhones, they have the podcasting app there as well, right? So there are so many people who is doing and it's been there for very long time, if you have noticed. But this company is not very old. This is Luxembourg based company, and ticker is listed in the US as well. But this is originally a Luxembourg based company. That's what at least it shows in its financial statements. And I'll go into the financial later on, but that's pretty much all about. And it's trying to gain more subscribers. That's the company. So I notice people, I listen podcasting as well. I don't use Spotify app, but for this analysis, I also went to the website, see how the company, what kind of podcasting they have, and what kind of content they have. So the content wise, it's okay, but not as great. But the main thing here is to, I think what they're trying to do is go and more subscribers, right? So the company is, so before I go there, let's see whatever financial we have, and then I'll stick to the agenda, right, before I go directly into deep. Okay, so here, because of okay, let me go and share some financial, right? So now I'm showing the income statement for the past few years, and then I'll show you the recent one as well. Okay, so in the income statement, basically what annual income statement which they have published in 2019, they have the flow for 1, 2, 3, 4, 5 years, right? So what they have shown here, the revenue, as you can see, is increasing well, right? The gross profit is okay, it's increasing well. That's not a problem, right? So here you see is almost double, right? 1 to 2, 2 to 4, 4 to 8, and 8 to not 16, but it's still close to double. So that's another checkpoint. The main reasons why I didn't plot or anything is, if you see on their net income side, right? If you see the earning per share, let's go from bottom up, right? It's all negative, right? So basically, if the earning per share is negative, then PE is, you cannot calculate the PE because price over earning is negative, right? That's one thing. And they even lost before tax, right? So the company is the income has the loss, so they have operating loss, right? As you can see, the operating loss is basically these are in million, right? So 191 million to increase again 16 and 17 increase, but certain drops a lot in 2018, right? So from the financial side, it's not very great, right? So the net incomes and the earning is decreasing. But if you can see from the 5-year, I'll show you the latest as well, the 2020 and 19 comparison on the coronavirus time, the first 3 months and all that statement. But let's start with the history, so that's and come to the latest data. So that's how I analyze it, and that's how I want to show here as well. Okay, so not everything is negative from the operating perspective, so that's pretty good. They have a good on cash flow perspective, right? It was negative for sure when the company is not very old company. When companies started, they have a negative, but then it's increasing the operating cash flow, and seems like they did some investment, which is obvious, right? Net cash flow from the financing activity, maybe they diluted their shares, and also that's why it is increased, right? So that's one, which makes the another thing is to point out here the earning before income and tax, right? This is all negative and this is all negative, but it's the trend is decreasing. But the good point is the free cash flow is increasing, right? If you see it's from negative, so the company has the cash flow. The cash flow they got it from the operating activities, and also the cash flow they got it from the financing activities, that clearly we can seen here. So from the liquidity perspective, I didn't see any problem. If I'll go deep into the operating cash flow, that's also shown here, the breakdown, what we have seen here, the bottom line, the EBITDA and the cash flow. So that's what we have seen. We are seeing that in the free cash flow, basically that's what they're driving, that how they come up with this number mostly is coming from the operating cash flow, which looks pretty good. Now if you see from the latest revenue diversification and the latest the income statement data, so this is the first 3 months, which is March 2019. If I compare with the last year to this year, first 3 months, the coronavirus time didn't impact. So basically, if I compare the first 3 months, they get the advantage of, seems like, from the coronavirus, right? Their income, if you see from the gross profit for the first 3 months, it's increased, right? And that's pretty nice. And also they have I'll go into the deep into the revenue as well, how they are coming with the revenue, but that's what it's happening. So from the gross profit, revenue is increasing. Another good point I like to mention here is their revenue diversification by the country. So this app is, as you can see, is not only popular in the United States, right? It's also popular in UK, right? Which is another, and then other countries as well, which is and also they have claimed that in other countries their individual makes up a greater than 10% of the total revenue. That's okay, but so it's pretty diversified in terms of the revenue by country. So which another check, I like this as a checkpoint. So the 2 checkpoints I like so far, the first is the revenue diversification, and at least they are keeping their gross profit margin, and the free cash flow is increasing. The negative part is for sure the net revenue is negative, income is negative, which I really don't like it. Okay, so that's on this side. And if I go to let's go deep into the cash flow. So if I go to the cash flow again, this is showing the cash flow increasing from the operating activities and so on. So let's take this, right? So okay, so before let's say what's more, right? So what's happening now? So now go a little bit one step deeper, right, to see, okay, why and what's the sources of the company. Okay, the company revenue is increasing, but what makes the company revenue, right? So if I go to the this is the Spotify letter to the shareholder, which is, as you can see, April 2020. That's a very good information. I find it here, right? First, they claim the company claimed that they have a very healthy in terms of the liquidity, right? So that's not a problem. 1.8 billion in liquidity, right? But one good thing about, like, if you compare as from their first quarter of 2020 to the last quarter 2019, that's, I think, the key. The key is the total monthly active user, right, which grows year over year, is 31%, right? That's a very big jump in terms of the active user. Another good point, but active users is good, but so the company is making revenue in terms of the premium, the subscription base, right? So the premium subscription is also increased by 31%. So it was 100 and then it jumps to 130, right? So it's 30 and 31 percent. That's what they're claiming. And on the ad support, basically they're also have the ad support platform as well. So the hosting, whoever is doing, so they're making the income from two holds. So that's one more good point I like about the company. So the company is not just giving the slot, charging from the consumer, but also they're placing the ads, and from the ads also they are charging. So that's a very win-win situation, honestly. So usually I see either approach in the business model. Either you get the money out of the premium subscriptions, or you place the ad and give the content free. But seems like company is smart enough in their business model, so they're getting both, and both side they are coming. As you see, is 32% if I compare as well. And in terms of the revenue, active user revenue, we can see in the next line, which is the breakdown of the total revenue, is 1385 to 1700, and these are in million, right, in euros. This is in euros, not in dollars. So 1.3 I believe is a billion to 1.7 billion, and also 17% increase in terms of the revenue. Here the revenue increased 23% from 126 to 148. So this is happened between 2019 and 2020. So let's see then how about 2019 and 2018? So I've also found out the letter of the last year, right? So here I got 2018 and 2019, and here is not 30%, but 26% is close enough. And but the premium subscription is increased 32%, 21%, right? And look at here, the financial dollar amount is also increased by 33 in the total revenue, but from the premium subscriptions. So the company is doing very good in terms of converting those active user to the premium content users. So which is good, right? If I see one more year back, I'll find that pretty much the similar pattern, and actually is a little bit even better pattern if the premium subscription increased by 45%, right? And then the total active user is 30 and ad supported is 21. So which we'll see in the dollar term. And here we also see in the cash flow is increasing, increase as well. Okay, so this is a very, very good. So this means, so these kind of a company I can relate with the Netflix, right? So Netflix is also the more user or the more active user is on the platform. So this means the company can able to get it converted into the premium subscription. But not only the premium subscription here in the Netflix case, or at least in the Amazon Prime case, I used to have Netflix, and now I have the Amazon Prime. We don't have an ad there. I haven't seen any ad there. But in this case, I'm seeing the ad here, so that's a bonus as well from there, and the conversion there is higher as well. Okay, so that's another good point. So far we have this growth in terms of the user, growth in terms of the content, and so now let's see their risk. Okay, so what are their risks? So that's also very important. So let's highlight their risk. Okay, let me come back as well. So I just hide myself so you're unable to see. Okay, so from the risk perspective, this is again coming back to their the document. So the risk, they're saying our ability to grow the business is depend upon the ad services and the premium services, and right. So that's main thing is to attract and retain users, right? And they were not successful. One thing I like to now see here is who are their competitors, right? The competitors are Apple, Amazon, and Google. So Google also has a podcast. I didn't know before. I only know. I thought maybe it's Apple, but they're mentioning there, and these are the big companies, honestly, in terms of the competition. But one thing to mention here, as the Apple podcast user, I haven't seen any initiative from Apple, right? Is they launched the podcasting a long ago, but they haven't done anything great to monetize from that perspective. At least I haven't seen that. And mentioned very clearly in their 10K when I did the Apple stock review, right? So maybe that's why the Spotify take the advantage of that. But that's, and they also mentioned there is some number of challenges there. For example, improving our ad services. They need to provide the high quality and user friendliness experience. The main thing is they continue to innovate in terms of the technology and our competitor, right? So this is more like a technology app driven business. So if they are unable to do that, they highlighted it. And also the mobility, right? So right now their app is on the mobile device, and we know soon the trend is also going towards more like a wearable and all. So I'm not sure whether they have any plans to move to the wearable devices, or you never know, like glasses and all. So that's something they need to keep investing and do that, because nobody wants to keep their phone with them, right? If they can then have an Apple Watch or some other watch, but because that's how the trend is. The next important, as usual, point as expected, and also we have find that when I was doing the Netflix, because Netflix is also the content driven, they have to pay a lot of fees in terms of the licensing, and also they highlighted the same thing, increasing in royalties and changes other terms in licensing affect the business. So that's pretty common as well. And what else, right? Okay, so they're saying we have incurred significant operating losses in the past, and we may not able to generate sufficient revenue and to generate profitable right. So if they cannot do that because of operating expenses and all, so their revenue growth may decline, and their growth rate is declining, right? So that's this. So that's on the risk side. There are something more, but then I think one more thing I like to add here in terms of 16. Yeah. So right now the data breach is very, very important. So they're saying if we have suffer any data breach, it can have the 20 million euro or 4% of the worldwide turnover. So basically what they're trying to say here is, right, some of Spotify, anybody can go there and upload the content, right? And if there is a problem and there is a breach, the company may suffer. So, or maybe there is a cyber attack and all. That's also they mentioned, but I didn't put it there. So that's pretty important as well. The company need to an eye on that. Here the companies in this slide, they make a very good detailed claim about their competitors. Again, it's mentioned as Amazon Prime, Apple Music, Deezer, Google Play Music, YouTube Music, Joox, SoundCloud, blah blah, and so on, right? And it's so many, right, which affects that. Okay, now we have seen the financial. We know they have a very strong competitors as well, and but why? And you see, this is the Yahoo Finance. I just put the ticker just to save the time, and I bring it. So at the moment, the price is very high. You see, this is all-time high, and recently there is a big spike in terms of you see the volumes here, a lot of high volumes, but before on the down the 30th in the March it was 129, and then soon it's rally and goes up and up, and then it goes up. It's all-time high 242, right? So what's the what at why this is going high, right? So high. If we see there the details on the, I'll stop this. Okay, if I see the details in terms of the in the risk, the beta is the company value is 45.16 billion. The P ratio is negative for sure because earning per share is $7. So if you invest your money by $242 to buy the shares, which I won't recommend for sure at the moment because the price is all-time high, you lose from the earning, right? $7.63. That's another problem. But still people are buying, right? So there is a craze why there is buying. So let's say what is this? So this is the podcasting industry, right? So if I go to the podcasting, I think this one. Yeah, I find this article. This is from the latest February 2020. And it shows the subscriber, right? So again, it says Spotify has the highest number of subscribers, 271 million users and 124 million premium subscribers, right? Apple, which has 60 million subscribers as of June 2009, right? Amazon Music has 55 million subscribers. Another, it's a Chinese company. They have 661 million user subscribers. That's huge in terms of subscriptions. YouTube Music has 1 billion music subscriber and 20 million subscribers as combined, right? Pandora and SoundCloud has some subscribers. So seems like if you combine all these subscriptions, right, the market is pretty huge in terms of but the main thing I think, if I want to ask, is there any growth in there? Because this podcasting is there for a very long time. So one of the article I find here is this is on The Verge. It says the podcast industry is expected to create 1 billion in annual revenue by 2021, right? So that's, I think, is the key, right? So this is increasing in terms of the revenue. If the revenue is 1 billion, and the second thing is the Spotify increased their subscription rate to 31%, and also the conversion rate of premium or ad services 31%. So this means they can have a good cut on that. So next is who are the, so this is the Inside Radio. I see the article. This research shows, this is the Nelson Scarborough US Plus. I think this is the Nelson. This research shows that the age level, let me go to the top. This is, you see, this is the pretty big company in terms of their research, and research shows whose demographic and all. So basically 21 to 44 year olds listen to podcasting, and mostly if you see the young college student guys and girls, they mostly, I see they're going and they have the, since Apple introduced the not wireless headphones, right? Sometimes you lost the word. They keep and listening the music, right? For me, I do the listen podcast as well, but the podcasting is more on the education and the content perspective. But I think from the radio there will be the shift in the market. If you see from the radio, all streaming and the podcast listening, the age is 39. Level of education, it says 14 years. Household persons, 3 people in their household. Income is podcasting. Basically, people who listen, they have a very high in terms of the income. That's what they mention. And the spend time, travel time one way in minutes, right? 20 minutes and all. So basically this is a good time in terms when you're traveling and all, right? And the podcasting is pretty good in that, especially while you commute in the train, you want to relax, and at the same time you want something to get into your ears as well. So that's on the podcasting. And the same thing, I find this one more article, this has more detail as well. And one, I think I forget to mention one, the recent spike here is because the Spotify bought the Joe Rogan show, right, which is a very popular 8.8 million subscribers. You can check on the YouTube. He just that show, and that show was originally on the Apple podcast, but starting after a few months, I think end of this month, year, or in September, I don't recall the month exactly, but it will be only available in the Spotify, and that he has 1 million active users. So if that user base will add to the Spotify and come to Spotify to search for that show, and they convert 1 million to 30%, you say it's a 300,000. 300,000. So the premium user, so you see the revenue will increase, but that's a very short-term gain. Now we have a two question to ask: do they always need to buy this and keep the momentum? I think they're pretty strong in terms of the podcasting industry. If you see from the podcasting industry has good people from the income side. You see near 100K in terms of their household incomes. So they're the premium, basically the little wealthy people. And if we see, does it has to, if I see from the very future, okay, is can be the growth rate there, but the second problem I'll see there is, okay, Spotify is good, they're doing a lot of good initiatives in terms of conversion and business model, but they also have a lot of very good competition as well, when it names is Google and Amazon, whichever industry it goes, it disrupt. So I think it can grow, but as an investment from the very long perspective, can it be a next Netflix? I leave that questions to my viewer this time, a little bit for a difference, and ask their opinion. Do you think it can be a next Netflix in terms of the growth, and can we and is the Spotify in the early phase of the podcasting industry? Might be the answer is yes, that it can be, but do you think that it can grow that high? And the listening user, I think adding on the 5G and the video content market is good. Spotify is good, but I didn't see that good as a very good from in terms of disruptions, or if I compare with any other those technology, right? That's, or as a very heavy returns perspective. That's my opinion. Maybe your opinion might be a little bit different. So let me know what you think of your opinion. Do you think is a very still going to be a strong buy, or from the long-term perspective, what you think? Or if you want me to cover any other stock, please put in the comment as well, and I'll try. But for me, I don't think so I'll invest in that. It might for sure grow, but the two reasons, for sure it might grow a little bit, but at this time it's very high in terms of the valuation. So the price is too high. So, and its history says it will come back. So if it comes back in the genuine, then people can think of that. Okay, so that's but everybody portfolio is different. Maybe it suits somebody else, but might be not my portfolio. Okay, so thank you for spending your time. Please do register. If you like this my view, kindly subscribe and like this video, so Google algorithm, if you like it, it will share to more and more people. Thank you, and see you soon on next video. Bye for now.